Hi, this is Anthony Parent of Parent LLP, the IRS Medic, and welcome to part 2 of our 2014 Guide to Offshore Voluntary Disclosure. In this video, we are going to go over some of the OVDP process considerations. Answering questions such as, do you really need to disclose? Also, if you actually qualify to use the program and what to do if you can't get into the program. And then we're going to discuss some of the alternatives to OVDP. And just for those of you who are jumping into this video, just a little bit about us. We are Parent LLP. We are tax resolution attorneys, and we have one of the largest OVDI, OVDP caseloads in the country. We're a tax resolution company, attorneys, and we have been helping people with their offshore disclosure since the 2009 initiative. So let's get into it. And in this video, we're gonna answer a few of the offshore FAQs. The FAQs on the IRS.gov, number 12 through 21. We jumped ahead for those of you keeping track. It makes a little bit more sense, we think, to go this way. We're going to be talking about the Streamlined Offshore Voluntary Disclosure Program for those, and then also for people who just need to file FBARs only, and that's pretty nice if that's your solution. And then we're going to talk a little bit about soft disclosure, what to do if you have gotten into that. So our first question is, who is eligible to get into the IRS Offshore Voluntary Disclosure Program? These answers come from FAQs 12, 14, 21, and also these answers also come from our experience, because there certainly is a gap between what's published and what the process actually ends up being. Generally, individuals, corporations, partnerships, and trusts all can get into the OVDI, OVDP. As long as they're not under investigation, and as long as they're not under audit. Now, as you notice, I have an asterisk there. And the reason why is because we have a case pending where the individual was under audit, but he was under audit for he was not under audit for his offshore accounts. He was under audit for some domestic income, self-employment income, and he just happened to have offshore accounts as well. So that is a case where the FAQ doesn't tell you that, but that's something where you might be able to get into the Offshore Voluntary Disclosure Program. One of the other requirements is that your bank isn't a no-no. That is, it's not one of these banks that the IRS has deemed that has a dishonorable intent. Some of those are also places that have blocked funds, also, U.S. sanctions, stuff like that. Another one is that you didn't fight a disclosure on info in the foreign jurisdiction. This is something that usually with Switzerland, there's a little difference in law over what tax evasion is, and so you might have grounds to fight a disclosure in Switzerland. But if you did something like that, you would not be able to get into the Offshore Voluntary Disclosure Program. There's still other things you could do, and we'll talk about that in a little bit. We'll talk about it right now. How about that? So what if you're not eligible for the OVDP, but you want to limit your criminal exposure? Well, something you need to understand is that there is a long way to go from a criminal investigation to indictment. There's even a long way to go before there's a criminal investigation. So here is something where you would contact a tax attorney with criminal experience, or a criminal attorney with tax experience. And what we find, because we are not criminal tax litigators, what we like to do is we like to work with people who are. Because we like using a team approach, because you definitely need someone who is a top-end litigator to stand up for you. But then that top-end litigator really needs a support team that they typically don't have. And so we like being the back end, and then having a front end, some of our friends across the country who don't mind representing people and don't mind taking things to trial and have a record of success. So that's something to do. You could contact us if you are unable, if you would not meet if you would not be eligible for the OVDP, but you want to do something instead of sitting there waiting for an investigation or indictment. Now, the other thing I want to talk about is a very common thing. What is a soft, quiet disclosure? I think in the earlier video I mentioned something someone talked to a tax, some CPA who said, well, we'll just do a qualified soft disclosure. Well, there's no such thing, and there really is no such thing. And I guess I should answer what a soft disclosure is first. And basically, it's known as just filing amended returns and paying any taxes you do, and also filing missing FBARs. You just don't go through the offshore voluntary disclosure process. The plus to it is that at no point do you make make the offshore penalty. So a lot of people look at it and say, hey, that's a great way to get around this 25% penalty, right? If you just file your missing returns, pay the taxes, then it's a great way to miss this, and everything's a lot simpler. Well, here's the thing. Remember how we talked about your criminal exposure really isn't your number one risk? Well, that's the thing. Who cares about the soft disclosure? You weren't a big risk for most people in the first place. It was really the reason why we wanted to get into it is because of the fines. The fines can get out of control very quickly. So that is why we want the OVDP. What happens in a soft or quiet disclosure, you could do that. You could file and pay all your taxes, but there's nothing to stop the IRS from coming back and assessing you FBAR penalties. Now, one of the criteria for assessing FBAR penalties is whether you cooperated or not. Well, doing a soft disclosure says you didn't cooperate because there was a program and you went around it. So the IRS is really going to be damned if they're going to cut you a better deal than someone who went through the program. So that's really why you could look to see a penalty greater than 27.5% on your highest account values. Of course, the IRS has made example out of people. As I said, there weren't any, your real risk isn't criminal charges. Well, the IRS has charged someone criminally who made a soft disclosure. So that's just something to be aware of. It doesn't guarantee it. It just makes the case a lot harder. If you do a soft disclosure, yeah, it makes it harder to file criminal charges. But again, you weren't really at risk for those criminal charges to begin with, rather the fines. So if you made a soft or quiet disclosure, you can get into the program. Now, here's one question, is whether or not you need to use the standard offshore voluntary disclosure program. We go to IRS FAQ 17. Okay? If you're just missing your FBARs and you just have signatory authority or no income, you can just file your missing FBARs. And there's a process to do that. You file them electronically with an explanation. And the IRS said, as long as you weren't, the IRS says, as long as you weren't, this was your first time, you didn't know, they're not going to assess you any penalties. So that's a pretty good case. Now we can run into problems, some complications. Is say let's say you were a co-owner of an account, and the account made income, but the other co-owner realized the income. And the other issue that comes up is when there's unreported income, but it's eaten up by expenses. Well, that we have seen the IRS still wants you to do the full OVDP. So that's not the greatest news. Now, do you have to use the standard OVDP for if unfiled 5471s? I have an extra 5 there. 50. Oh boy, I'm all wrong. 5471. So let's just get that 5471. Okay. I'll blame. So if you have unfiled information returns 5471, 5472, 3250, the same thing. You could just file those, and there's a process by which you explain to the IRS there's nothing due. The full OVDP is not required, and that's pretty nice. Now, can you use the Streamlined Offshore Voluntary Disclosure Initiative? Well, I hope so, because it is a lot easier than the OVDP, but it has some very significant limitations. FAQ 17 is where we look for this, and something you have to realize is there's no protection from criminal exposure. But as we discussed before, for most people, the criminal exposure isn't a big risk. It's excessive fines. And it's only available for those who've lived outside the country. And it also something where it's something where you have had not to file your taxes. That is, you need to be unfiled. And if you think about how backwards that is, right? The people who don't do anything, who don't file anything at all, they're sort of given a deal that they don't have to go through this whole program. Whereas somebody who did file and just didn't realize that the U.S. taxes its citizens in all people on their worldwide income, that person cannot use it. And also the IRS does say where people are high risk, they give some general explanations of who is high risk. I would just say that from a criminal aspect, they seem that I would say the high risk is the threshold's a bit higher than what they say. And that's something you can talk to an attorney about, to whether or not to determine whether or not you're high risk and if you qualify. It is nicer if you can use that streamlined OVDI, as the process is a little bit quicker, but not entirely all that much. I'm surprised by how much quicker it isn't. But then there aren't those big fines that you're looking at or that you have to worry about. Now I just want to I want to finish up with some of the timing. This used to be a bigger issue, and there's actually some people it still does apply to. Some of our older clients, I actually have a case from December of 2009, as I am recording this on December 18th, 2013. We still have a client who's just began the opt-out process, who I filed in December of 2009. So some of these people it does apply to. If you have something though that is going to be time barred for a lot of people, if you did do the 2009 OVDI, you're going to remember, as we discussed, is that there was no opt-out procedure. And so a whole bunch of people who made innocent mistakes ended up paying 20% of account value. So that might be something you might want to reconsider, but you only have a limited amount of time to do that. You can go back and opt out of that amount. And I would just say those penalties can be a lot, and there's really not a lot of if you have good reasons, there's not too much downside for opting out at this point. If you do meet the reasonable cause, 20% of account value is an awful lot. Now, if you filed between September 9th, 2011, but before January 9th, then the 2012 rules apply. So I want you to go to, and it's going to be part 3 right here. I want you to subscribe to this channel if you haven't already, so that you can keep up to date with our updates, because we're going to have part 3 coming out soon. And we're going to be talking more about the OVDP process, but we're going to go over the submission and then some of the technical things required to do that. So subscribe to this channel, and you will be the first to know when it's up. And if you're looking to talk to someone about making a disclosure, what you need to do, please call our OVDP hotline at 888-477-4258 or email info@irsmedic.com. This is Anthony Parent of Parent LLP, the IRS Medic, and I thank you for watching.